Good morning, everyone. In today's video, we will be discussing about a very important concept of financial management, in which we will be dealing with the meaning, what is the scope, what are the objectives, and what are the functions of financial management. This is one of the topic which is considered as a syllabus of UGC-NET management also. All right, and we will be discussing these 4 points and some MCQs related to this financial management concept, which have the probability to be included in the UGC exams also. So let's start with what is financial management. See, it is a very important activity in any organization, and financial management is like we are all do our we all manage our finances, day to day finances. We are planning, we are organizing, directing and controlling the financial activities. Like this everybody is doing, whether he is an individual, whether he is a professional, whether it is an organization, anybody you take. The financial management is all about planning your finance. Like you have to plan how much you have to spend, how much you have already spent, and how much you need further or something like that, right? So that means we are applying general management principles to manage the financial resources of the company, right? Now this financial management, it is the best approach for controlling the financial activities of an organization. Now what are the financial activities of the organization? They are like, we are procuring the funds, we are utilizing those funds, accounting, payment, risk assessment, and everything which is related to the money management. Fine. So this is what is financial management. Now, if we talk about the scope, it is like financial management, they are helping a organization to utilize their funds, their finances most profitably. And basically what we have is, in financial management we follow two kind of approaches. One is the traditional approach and one is the modern approach. Now according to the traditional approach, the financial management scope, it is only restricted to the procurement of funds by the organization so that they can meet their financial needs, right? So what do you mean by procurement? I am continuously using this word procurement. It refers to like when you have to raise the funds externally as well as the at your own level, when you are trying to raise funds for your organization, that is known as procurement of funds, right? Now there are three things which are used for the procurement of finance. Like it can be financial instruments, it can be the various institutional sources of finance or something like that. Fine. Now according to the traditional approach, the financial manager, he is not responsible for the efficient use of funds, like whereas he is also, but he is responsible to get necessary funds on fair terms from the outside parties. So this is what is traditional approach. Now if I consider the modern approach, the financial manager, he is considering the broader area also and analytical area also, meaning that he is concerned with both the procurement of funds also and how to utilize those funds optimally. These both things are the responsibilities of the finance manager, right? So now according to this modern approach, there are three types of decisions which have to be taken by the finance manager, and those are investment decision, financing decision, and dividend decision, right? Now this investment decision, this is related to when we have to select the assets in which you can invest your funds. The asset which will be acquired by a firm, it can be a long term asset or it can be a short term asset also. Now the decision taken to invest the funds in long term assets, it is known as capital budgeting decision, right? When you want to invest your money in fixed assets, in long term assets, those are the capital budgeting decisions, right? Now when we have to take this decision, whether you want to invest in the short term assets or you want to invest in the current assets, that decision, it is known as working capital management, right? When you have to deal with the current assets, that is working capital. All right. Now the next kind of decision which the companies, the finance manager, they have to deal with is the finance decision. Now finance decision, it is like, there are two things in this. One is financial planning decisions, wherein we are trying to estimate the possible sources of the finance and how we are going to use those funds, right? So a proper financial planning is required. Fine. And second kind of decisions in this is the capital structure decision. Like you have to identify various sources of the funds. You have to facilitate the selection of the best external source for short or long-term financial requirements, right? Now this financial decision, it is related to the at what rate or at what time are you going to purchase the funds, or you are going to raise the funds. Now when you make the decision, after this decision is made for the fund requirement, then finance manager, he is going to select the various options for financing, and he is going to select the best one, cost effective, for financing. All right. Now the third decision is dividend decision. Now this is like, dividend decision means, what is dividend? The net profit of the company which it has to distribute among the shareholders, or they have to keep it with themselves. That is the dividend decision. Like how much you are going to distribute to the shareholders, how much you are going to retain it. That is what is the dividend decision. So it is concerned with, like you have to determine what percentage of profit earned is to be paid to the shareholders, right? So they have to decide that. That is what is known as dividend decision. All right. Now next comes the objectives of the financial management. Now the main objective of financial management is, we have to manage the finance of the organization, so that the organizations, they can follow the necessary rules and regulations, and they become successful in their field. Now this process, it involves a rigorous planning, it requires a proper execution, and when you are doing this very precisely, your businesses are definitely going to flourish, and you are going to increase your profitability also. And this is the main reason why the finance department, they are playing a significant role in the organization. Now the first objective is, you have to ensure regular and adequate supply of funds for the organization. This is the main objective, that the funds should be always available with the company. Second is to ensure adequate returns to the shareholder, which will depend upon the earning capacity, market price of the share, expectations of the shareholders. Now this is related to the dividend decisions, that how much, see, somebody is investing money in your organization with an expectation that tomorrow they'll get a return on that money invested, and all that is going to depend upon the financial condition of your organization. Third objective of financial management is, they want to ensure optimum funds utilization. Now when you have raised the funds, like when you have the money with you, now you have to utilize that money in a best possible way. Fine. Fourth thing is to ensure safety on investment. That is, funds which you are investing, that should be safe, that should be invested in safe ventures, so that you can obtain the adequate rate of return. Another one is to plan a sound capital structure. Now you should have a appropriate composition of the capital. You can raise money. Everybody of us, we know money is raised from two sources. It can be debt, it can be equity. You cannot have 100% equity, you cannot have 100% debt. So it should be a mixture of that, right? So you have to decide that balance, that how much should be the equity and how much should be the debt. Now the next thing is the functions of financial management. Now in the functions of financial management, first thing is, you have to estimate the capital requirements. Second is, you are going to determine the capital structure or capital composition. Third thing is, you are going to evaluate and select various sources of fund, and you are going to allocate and control the funds. After that, distribute the profits or the surplus, then monitoring the financial activities. Now these are the 6 functions of financial management. Let's see them one by one. First one is estimation of capital requirement. Now the finance manager, they have to estimate, they have to determine how much capital they require for their company. Like for that they need to make an estimate of their cost, what profits they are expecting, and what the future programs and policies are going to be, right? So they have to make the estimate so that they can actually make a forecasting that how much money they require for their business. Second thing is determination of capital composition. Like capital composition, it is like it involves short term and long term debt equity analysis. This is going to depend upon how much proportion you want to keep it as equity and how much you want to keep it as a debt form. Then third thing is choice of source of funds. Like when you have to procure additional funds, you have to decide, like, do you want to get that money raised through these shares and debentures, or you want to take a loan, or you want public deposits to be drawn like in the form of bonds. Fine. Next is investment of funds. Now once you have raised the money, now you have to decide, you have to allocate those funds into the ventures where you can expect that your money will grow in the future. Fine. And you will get adequate return from that. Next is disposal of surplus. Now after all the expenses are made, with the net profit available with the company, that is the surplus amount, right? Now they have two things: either they can distribute that surplus amount to the shareholders in the form of the dividends, or they can keep those net profits as retained earnings with them, so that as a working capital for the next production cycle. So it is going to depend upon that, and you have to decide what your company wants to do. Next is management of cash. Now they have to do the cash management also, because cash is required for paying the salaries, where you have to make the electricity bill payments, water bills, etc., etc. So you have to manage those cash. Next is financial controls. Now it is like you have to keep a control over the finances. Along with the planning part, you have to control your finances also. Like you have to do the ratio analysis, financial forecasting. You can also make after a fixed amount of time, you can do the inspection of the records, financial statements, and from there you will get an idea that how much cost is being attributed and how much profits are there, and so on. All right. So this was all about the concepts of financial management. Let's have some MCQs related to financial management concept. I have included these MCQs from the UGC point of view. Dash is concerned with the duties of the financial managers in the business firm: financial management, accounting management, personnel management, merger. Obviously, the answer is very simple. Financial management is the right answer. Dash is the main goal of financial management. What is the main goal of financial management? Profit maximization, fund transfer, maximum returns, wealth maximization. So the answer is they want to maximize their wealth, shareholder wealth maximization. Main objective of financial management of an enterprise is to maximize the business expenses. Nobody wants to maximize the business expenses. Maximize the profit, maintain bills and payments, maximize the production cost. Obviously, this is also not the possibility, and maintain bills and payments. No, this is the right answer. You want to maximize the profits. Now, for maximizing the profit, production is to be minimized, ignored, maximized, downsized. You will maximize your production so that the profits can be maximized. The concept of financial management is mainly related to procurement and utilization of the funds for company operations. Okay. For maximizing the profits, the cost should be obviously minimized, right? ये तो हम सबको पता है कि we want to minimize the cost. All right. So this was all about financial management: meaning, scope, objectives, functions, and some MCQs. If you want more MCQs, then stay tuned to my channel. I'll upload another video for only the MCQs of financial management. All right. Thank you. Have a nice day.